Eva Yazhari, CEO of Beyond Capital Fund. We are a charitable foundation that acts like a venture capital firm, and we make investments into India and East Africa in healthcare, water, clean energy, and sanitation. Yeah, I think it's a really great question. The Obama administration is very socially minded, and in my opinion, the focus will be more on renewable energies and other investments that aim to increase the social wealth of society, and that actually dovetails very well with what Beyond Capital Fund does, in the sense that we aim to make a social impact and also earn a financial return at the same time. And I envision that wealth managers and private wealth managers and family offices will also have those same opportunities in the US, in Europe, and abroad. So, as I said, there are lots of socially oriented investments, and some of them are traditional SRI, others are funds that are focused on social impact investing, maybe in a wind turbine company or a water technology company. And all of these companies and funds and investment opportunities are helping to solve social problems in the US and Europe and also abroad. And family offices and wealth managers can decide how they would like to allocate their assets among these types of opportunities. Some of them have a very high return profile, some of them look like debt or cash. And I think it presents an interesting spectrum and diversification for their portfolios. Well, my mantra is really socially oriented investment. And so I would ask family offices and call them to act upon a diversification strategy that includes more socially aware investments. Those can be very low risk in some cases, they can be very high risk, and it's a matter of fine-tuning their own preferences to see what fits best in their portfolio. And so you can actually construct a portfolio specifically focused on social impact, ranging from cash to debt to equity to funds, as well as private equity and venture capital. And so you can create a complete asset allocation. And I think that's an interesting way to diversify away from, for instance, the Eurozone or some other areas which are having some strife at this moment and potentially will do so in the future. Well, I think one of the other panelists, Stephen Fern, said it very, very well, in that it should be a conversation with the family. And on the tax efficiency side, I have less of an expertise, but mostly from the smooth transition, having the children and the next generation wealth integrated into the understanding of what they're going to inherit or what they have already inherited, and how that wealth should be managed in a responsible fashion is key. And I think it gives them then the stewardship to really understand where they can either have an impact with their dollars or just traditionally grow their assets, but they feel that they have the key and the tools in order to do so. And so it could be a traditional asset allocation, or, as many next gen are very interested in, it could be socially oriented. And so it depends on the family and their very specific priorities, where they want to place their emphasis in instruments, in whether it's geographies or various sectors as well.